If you're tired of your 9 to 5, or you're looking for better alternatives to invest, or you're looking for a way to become financially free, stay tuned to my program where I teach people how to become financially free through multifamily real estate. Recently, we were trying to go under contract for 2 deals. So one of it was in Texas, the other one was in PA. It's in PA. So the Texas deal, we realized that the owner added an additional 10 units without permits, without going through the paperwork, nothing. He just built it and was willing to hand it over to us. So it was during the PSA, when we were trying to sign the PSA, we were asking questions. We asked him to give us the as-built survey. And that was when he had to come up front with us that he cannot provide the as-built survey. And we were like, why can't you provide the as-built survey? He said, because I've made some major alterations on this property. And that was a signal. So we're like, okay, did you go through the regular process? He said, no. So, and for a state like Texas, the city comes to inspect your property every year. So it must be up to code. Your permits must be up to standard, everything. So imagine if we've taken that would have been a major liability on us. So that was a no-no, and we pulled out from it. Now, the second one, we're trying to go under contracts for, let's say, 3 million on that deal. But when we asked for the items, he provided very few items, but he provided the T12, the rental, and the invoices and receipts. So with that, we were able to verify that the expenses was actually 90,000 above what he said it was. So what he gave us was like, let's say 176,000. And when we were doing that, we found out that it was about 260 or 270, about 90,000 difference. The result of that was a decrease of 1 million. So it meant that if we had not done the due diligence, we would have overpaid on that property by an additional 1 million. So based on the fact that we were able to discover that the property was worth less than $1 million, due diligence helped us to save $1 million, and he gave us the platform to renegotiate the deal, which we're still currently on. We're still negotiating it. Then the second thing that the due diligence helped us was we realized some CapEx items that we asked the owner to give us some credit on. So some things you can do during your due diligence, you can request for credits, but not that you carry all your liabilities or everything and you give to the seller to provide. No, depending on what your business plan is. Like if you're doing a value add, you necessarily don't have to give him 100% of all your repairs to do. But all the major things, like if it is a roof item or a boiler or something that is very heavy, you can decide to transfer that cost to him by requesting for credit, which we did. We've done that several times on our deals. We've demanded for credit on our deals, and we've always gotten them. So on this particular one, that is what happened. So moving to the next, risk mitigation. One of the reasons why we do due diligence is for risk mitigation. Things like environmental report. Environmental report is usually done on multifamily. You don't see this done in single family, but multifamily is important. The bank most times requests for environmental report. So you can request from the owner to give you the previous one so that you know exactly what it was at that time. And you can also conduct a new one. Sometimes, depending on the age of the environmental report, your lender might accept it or decide to conduct a new one. But if you are conducting a new one and you have access to the old one, it just gives you an idea of if there were already environmental issues on the property and all that. So that is very, very important. Then as-built survey, remember, you need to know what exactly the property was like at its initial stage. Was any alteration made? Has anything significant changed? This might become a liability to you, so you need to ask for that. Then owner's title insurance binder. This one helps for to know if there are liens and all that on the property. It's important that you ask for those documents. All notes, trust deeds, and other document relating to title, to liens and debt against the subject. You want to also know if it's the owner that owns this property. We recently closed on a deal that was last year, and the owner's name was not the one on the deed. Apparently, it was his father's name, and they didn't do a proper job of really transferring it. So that was a major issue. And the city was telling us if we don't rectify it, that means we did not buy the property. Imagine you closing a property after 3 months and finding out that your name is not with the city. You don't have your LLC registered with the city and all that due to the previous owner's error and all that. But the good thing was that we had a relationship with the previous owner. So everything was rectified, even with the escrow company, and we moved on with it. But this is very important for you to check all this. Property and title insurance commitments, very important for you to check. So that is for risk mitigation. The next one is understanding the market condition. This is very crucial in the sense that you need to know your local market trends and condition. Things are really changing pretty fast. Some of you that are in the Texas market or in the Dallas market, you guys are noticing that the rent is cooling off in some areas. Because sometimes to even get an LOI accepted can take you like 2 to 3 months right now with what we are seeing. Before they put it on a best and final, before you go through the entire process, months have gone and all that. So things might have changed within that period. So you need to also check your local market to really do the real job, because it's possible that you did a surface level market survey at the time at which you gave out the LOI, because you always want to be fast with sending out your LOI. Now the due diligence for you to now do the real job to be sure that those projections that you said you were going to get, you can achieve it. Remember, if those projections are wrong, it's going to affect the management of this property. Your asset management operations will be affected if you did not do your market trends and conditions survey or your rent and sales comparable very well. So the next one is rent and sales comparable. Rent and sales comparable is very important because it has a lot to do with your rent. We are projecting that if I do this, if I renovate one unit, I can raise it by another $50 or another $100 or another $200. You need to be sure that those projections that you said you're going to achieve can really be achieved. And your sales comparables, you also want to be sure that you're buying the property at the right market price. That means you're not buying above what your comparable sales people are buying it, because that determines also your cap rate. Imagine if the market is at 6% cap rate and you're buying yours at 4%. For those of you that don't know cap rate is very important. It helps to show the value of your property. So the lower the cap rate, the higher the value of your property. The higher the cap rate, the lower the value of your property. So let's imagine the market is low, meaning that everybody is buying their property at 6%, which is relatively low. If they're buying it at that and you decide to go and buy yours at 4% cap rate, then you have an issue at your exit. So that already is an issue at exit. So you've already made that mistake at the beginning. And when you're trying to exit, you're at 4%. Then where do you want to go back? Where do you want to shrink your cap rate to? So when others are from 6, at the time of exit, their exit might be at 5, but you are at 4. Because you're at 4, you bought it wrong in the first instance. You'll be finding it difficult to compress your cap rate at that point. So it's important that you verify that at that time. Your rent trends, know the rent, because like I said, your projections, you need to know your rent escalations. What is the trend of the market? I remember when I was underwriting in 2023 and I was looking at market trends, I intentionally skipped the trend in 2022. The reason was because 2022 trend was really pretty abnormal. It was not a trend that I knew was sustainable because every rent was going higher than normal. Rents that were 900 were going to about 1,400. We're going to 1,000, 1,300. That is, we're seeing rent increases above 15% increase, which is not normal and not sustainable. So what I did was I went backwards, previous years before that, to see the actual market trends at that time to be able to tell that, okay, my market trend should look like this. So demand and supply dynamic study, you need to know the demand in that area and the supply for you to project, okay, because we have few multifamily properties in this place and we have more people that requires it, that means I can increase rent based on that. Because if you have a lower demand and you have more supply, tendencies that you can increase your rent is high. But when you have great supply of multifamily and you have low demand for it, that means you might even be giving concessions to your tenants, to people to come and fill up your property. So these are the studies you need to do in your market to be sure that you are really understanding the market conditions of your market. legal and regulatory compliance. It's very compulsory. You can't allow any of this slide at all because they are very crucial to your property. Title companies, sometimes we leave all these items, the legal and regulatory compliance, to the title companies to do, but really they do not owe us the entire obligations to verify all this, although they can assist us in doing a title search, checking records and disclosure requirements. But if you need to do the in-depth one, you might need to involve your other team members to help do the research to find out exactly what is going on with the property. Recently, I did a video somewhere, and the property has structural issues, and you wouldn't know. Nobody would tell you. The broker didn't tell me. Nobody told me, but it took me to make some findings, some research to find out that it really has some structural issues. So imagine if we took that on and we did not check or verify, then on the get-go, we have a liability right there. So these are very crucial things you need to check out for. The local building department, you can call the city and find out some things yourself. And these people are very responsive. Lease agreement. So let me talk really about the lease agreement. This is where the property tour comes in. When I mean property tour, you go into all the units. So when you are doing your due diligence, one of the reasons why it's advisable you do a tour around the entire unit is, one, you are checking for CapEx items you need to sort out. Especially if you're doing a value add, you need to know the items or the units that needs to be renovated, or the type of renovations you need to do. Not just that, you also need to verify the square foot. Remember, the rent, most times, the rent is fixed on square foot, like is rent per square foot. So any square foot can drastically reduce the pricing on your property. So let's say the owner has communicated that the size of the room is 600, and during your walkthrough, you guys measured it and you found out that it's 500. You've lost 100. So let's say that property is 120 and everything it was said to be 600. That means you've lost 100 times 120. That's a lot of money you've lost right there. So you are verifying the size of the unit. You are not just verifying the size of the unit, you are also checking the plumbing and the electrical units. Plumbing is a major issue, and the electrical. So it's important that you check out on this. We recently worked on another unit and we found out that water was coming out from the wall. That was a plumbing issue. What kind of plumbing did they do on the wall? These are things you need to find out. One of the easiest way for you to know the plumbing that was done on the property is through the water heater. You can see the connection through the water heater. You can check from there to verify that. But typically what I normally do is involve my property manager and third-party vendors to take off that stress from the team, from the GP team, not just taking off the stress. Besides, they are professionals. They know these things better than we do. So you need to involve them in all these items to help you verify, especially the property itself and the market. You need to involve them. This thing is not free. You pay them for it. There's money that comes with it. So that's why I said doing the due diligence comes with a cost, but it's a lower cost compared to what you will lose in the future if you do not do these things.